morning, everybody. Welcome to the Trading Market Technicals morning call video for Friday, October the 5th. Big day today. We have non-farm payrolls come out, and that always is a big number. Lots and lots of market participants, traders, investors will be watching this number very closely. And I think this is the last number prior to the election. So this is going to be a pretty good impact on at least the prevailing trend and or maybe a market reversal. And let's see what happens. Take one step at a time. Coming into these numbers, you should be flat, hopefully to be flat, because it could be really whipsaw. At least the first hour and a half, and then the market usually starts to digest, and you usually kind of get the true trend going into next week. So we'll see what happens. We had a Mitt Romney push yesterday because he won the debate, and as you can see on a 5-minute chart in front of me, we had a gap up, and then we had good numbers. I believe it was ISM, or no, it was durable good orders, I believe, and then we sold right back down again, and then we just kind of carved up and down, choppy session yesterday. And this is what we've been getting, right? A big move here, and then a move back up, a sell-off, and then a sideways consolidation with a bounce back into the close. So really crazy 3-4 days. Not really much to do at all, because once the market puts itself in and starts to create some sort of this big push and down, and then it kind of dies going into the rest of the day. But there's still some opportunity if you look hard enough. And like I said, I like looking for catalyst, some sort of an upgrade, downgrade, a reason for the market to go up or down. Not looking to fade any kind of strength, because as you know, there's definitely a bid in this market. So today's going to be a good day, at least to see where we go. What direction do we go? Do we continue to move higher in this crazy market? And this market has been moving up and up since June 4th. So this is a pretty extended rally, and I keep saying that the market needs a rest. But again, it's not what I say, it's what the market will do, and then what we will do to follow that trade. So let's just keep an eye on things. I wanted to show you, I want to get right into the charts, because I wanted to show you what I found yesterday as far as these double patterns. We had on the FXC, now this is the euro, okay, this is the euro. We had a bear flag, clearly well defined. Now we broke back out of this bear flag. So this bear flag is obviously going to fail unless it gets back in here today. If the euro starts to move again higher, then obviously this flag will be negated, and we'll just get rid of that, and we'll just say that this is a downtrend channel here, looking for downtrend channel, which just basically broke out of the channel, and that's what we're going to be looking for. That's probably what it is right now, and that's why, guys, when you're having these patterns, we need a trigger. We just can't go in and say, okay, bear flag, I'm going to short within the bear flag. You want to short below the break of this flag, all right? And if it's a bull flag, it will be the upper end of that trend line. But that's how it works. Unless a lot of traders get in trouble, they say, oh, I see a bear flag, I'm going to short it, because you shorted here. But look what happened. It stopped right at that lower trend line, and the next day we had a major gap up. So you would have been, point and a half out of the money. So that's really not a good thing to do. So we're going to take a look at this. Obviously, euro had a big run. Actually, since June, we've been chopping around here, made a lower bottom, and then we actually exploded to the upside here late August into September, and then we had a drift back down here, and now we're just kind of moving that top. Now, can it make a double top up in this area here, or maybe lower high, make an M formation, and then start to sell off? That's what I'm looking for. I just don't. Again, all eyes are on Europe again, and not China. I do see the euro actually looking for a nice ripe sell-off at one point in time. But speaking of Mitt Romney, I want to just talk briefly about that. And this is a technical website. It's nothing to do with political politics. Excuse me. But yesterday, coal stocks had a big move, and I'm a big fan of these coal stocks, especially at these lower levels. And we had a nice big pop last week, and then we ended up selling off. Prior to that, but Mitt Romney spoke positive about that sector. Now, if he gets in, this sector is going to explode. I mean, literally explode. And let me get rid of that. Now, I wanted to show you. This is the weekly chart. Well, matter of fact, I want to show you the weekly chart of this too. But I wanted to briefly point out about the coal stocks. If in fact the coal stocks can make a good move higher. Now, the thing is this: either you have a play that you can, obviously for a day trade or for a swing trade for a couple of days. You got to be careful going into the election, because if Mitt Romney does not win, then these coal stocks will get hammered again. And obviously, we don't want to take that kind of risk. We want to take some calculated risks here. So that's something that I just wanted to bring to your attention as far as the coal stocks are concerned. All right, so now let's move back into the charts. FXE. Yesterday I said, guys, it looks like to me that this might be a symmetrical triangle instead of a bear flag. But we have two patterns. Let's see which will play out. And obviously, if I take this bear flag away, look what happens. We have a symmetrical triangle breakout. Now, I'd like to see what happens today. If we come in and back test this area, then on Monday we start to run higher. We have a confirmation that this symmetrical triangle is a breakout, and we can take the measure move from here to here, and that's where we're going to go. And it looks like more than likely we'll be up at somewhere around that 1500 area. So this looks like a symmetrical triangle breakout, guys. This does not look like a bear flag. Now, again, our bear flag pattern has not triggered a short because we have not broke the lower trend line. So this is why I say once you find a technical pattern, you would need a trigger. And this looks like to me, obviously, clearly a symmetrical triangle. Okay, and looks like we will be moving higher before we move lower. Now, here again, Spiders Daily. We have that head, left shoulder, right shoulder, and it's a small one. So, this is something that I wanted to just make a note of because it is a small head and shoulders pattern. Usually, when they take months and months to form, it's actually much stronger, much powerful when they do break. Okay, symmetrical triangle again. I left this in here because I just want to see what happens on today and Monday, but more than likely it's a symmetrical triangle. And if that's the case, next pullback is when you want to look to start entering a long position. Again, 30-minute chart. As you can see here, clearly a symmetrical triangle. We take this and we extend that back out again. Broke out, and then now we're just looking for more than likely any symmetrical triangle or breakout patterns, usually back test. So maybe we come in here, and then now if in fact we do take out and get back into this apex of this pattern and start to break lower, then we could define it that saying, hey, you know what, we might have that bear flag working out in general. But so I don't want to. I'd be looking more for long pullback, buying longs, than looking to short the market, unless again you have some sort of a capitulation, some sort of a capitulatory run up and really expanded. Again, same here, guys. I have this here just to show you that little bear flag that we had, but literally broke out and we're back above this trend line. So to me, again, guys, looking for symmetrical triangle breakout. Transports. Bullish fallen wedge, sloppy, but sure enough, it is. Now we're back into this area, so maybe another big push in, and then let's see if this fails. If in fact it fails and starts to roll over, then that's going to help the bearish case as well. Now, believe it or not, the transports hasn't helped the bearish case quite at all, actually. But in fact, we did get a little bit of push lower, and then now we're just having that oversold bounce. Look what happened. The stochastics hasn't even moved at all, and we're starting to make higher highs in the histograms, but we haven't really crossed back over the zero line. So it still needs a lot of work. But look at the 20, the 50, 200 way up in here. So there's a lot of heavy resistance going in here. But again, guys, anything can happen in this market. It's a crazy market. Okay, a couple more charts I just want to get into, and I want to talk about Apple. I said Apple, we might have a little bit of follow through up to the 200, and we did actually. We actually went up to 674.02, but look how it failed miserably. So this tells me that Apple's getting to be a better short than it is long. Now, if you're still long out of the breakout of this downtrend channel, obviously your stops would be, I would pull your stops up. Don't lose money on the trade because we did get a good bounce off of this. I mean, probably up about a good 20 points in this trade. Keep your stops tight. Bring it back down to the low of this previous day, just in case if something does crazy happen with Apple. But nonetheless, we could take back this Apple today and at least get up to that 200. I'd like to see a 200-day and then fail and then probably look to get short. That would be a good spot up here because we're right up into this area of supply, and then we'll look to really resume the downtrend and look to at least get to that 644 or that 630, that 25 area, okay? So if you are long, just raise your stops just in case. You never want to lose money in a good trade. IWMs. Now, the IWMs was interesting yesterday. I was looking at the Russell. Russell was much weaker than all of the other indexes, so I still believe that money is coming out of the risk assets and running into some of these safe havens, which will be the healthcare, the utilities, and these are the sectors that I'm watching, and they continue to rise while this market continue to have a bid underneath it. But if you see, look at these bottoming tails. big bottom to break back up again, and then we close back in here. So, a lot of these patterns you want to see on a closing basis, okay? So we broke down, but we closed back up. We broke down miserably yesterday, and look what happened. We closed right back up into that flag pattern again. I'm going to leave this in here because to me, I'm going to see what happens. This looks more like really that head and shoulders and that bear flag. I'm going to really want to keep this in tune. And this is that high area here. But again, guys, a break above here. All right, a break above here. This is going to send this pretty much testing that head area of 86, 85, 30. And let's take a look at the last one with the Qs. Qs very, very sluggish. Again, thanks to Apple, because Qs is heavily weighted in the index. So whatever Apple does, Qs are going to do. That's why I kind of stay away from the Qs unless I know that Apple's really getting smashed and really getting hammered, and or catching a real big bid. Then I look to play the Qs as well as the semis. But the semis really weren't doing too well again, as well as semiconductor index. So just kind of keep abreast of what's happening. Today we have the non-farm payrolls at 8:30. So this is going to be a very interesting mark here between now and the next several weeks. Again, we're into some seasonal weakness, but that could change again with our friends from the central banks all over the world talking up the market and propping the market up. And keep in mind, watch it. Every time the market starts to sell off and at a major pivotal point, someone out of the central banks around the world will talk up their markets, whether it be China saying they're going to have their triple R rate cuts, or the ECB, Draghi speaking that we're going to be behind the euro. And as a matter of fact, Draghi was out today, ECB assurance, saying that we assure you that we are ready to buy bonds of any troubled Eurozone member. That's quote unquote Mr. Draghi. So just keep that in mind, guys. We're not just playing a fair game here with the markets. We're playing with everybody else's manipulation throughout the world. So that's why kind of day trading would be better, at least for now, and then until this market kind of digests what's going on, and then we get these central banks out of the markets, which they should be staying out of the markets, and let markets be free markets. Okay, have a great day, everybody. We'll see you on Monday. Watch that non-farm payrolls. We're very excited today. We could have a really, really couple of nice big trades today going on. All right, have a great day, everybody. Enjoy the weekend. We'll talk to you first thing Monday morning with a full report.